Yes, Assalamualaikum. This is your teacher, Sir Harith Bhatt, and today we are going to study the topic of manufacturing account in A2 accounting. So we are going to study A2 accounting, and we are going to go for our topic of manufacturing account. Let's see which question we are going to solve right now. This is one of the new question which has come in the paper. So let's see the paper first. That is February-March 23-32. So this question has recently come in February-March 23-32. You have to go through the February-March variant also for your A-level grades. That is also important. So let's discuss the question. Source A for question 1, because insert will be given separately and question paper will be given separately. You have to go through these papers. So J Limited is a manufacturing business. It applies a rate of factory profit of 20%. So the factory profit is 20%. It means that markup is 20%. If I want to convert it into margin, then it will become 20 over 120. Because if something is given out at transfer price or at selling price, then we have no other choice to convert our markup into margin, which is 20 over 120. Sales revenue, purchase of direct material, direct labor, given factory overheads, admin expenses, selling and distribution, increase in direct material inventory and decrease in work in progress inventory. And next is increase in provision for unrealized profit and finished goods inventory at 1st January at transfer value was 26,000. Number one thing is this, that 1st January means that this is finished goods opening inventory at transfer. Number two, if the question will not require us, or it is not given in the question that it is the value is at transfer price, we will consider that it is at transfer price. So it's not needed at all that it should be written in the question or not. क्यों? क्योंकि ऊपर लिखा है कि आप फैक्ट्री प्रॉफिट का रेट अप्लाई करते हैं 20%. अगर फैक्ट्री प्रॉफिट का सवाल हो और कुछ ना बताया हो तो हम अज्यूम करते हैं कि ट्रांसफर प्राइस पर ही गुड्स दी हुई हैं. आगे जी. Sir, where is opening inventory of direct material and where is closing inventory of direct material? Where is work in progress opening? Where is work in progress closing? Oh, that's very difficult. So how we are going to calculate it? Though we don't need to calculate it. Why, sir? Because I will give you an example, then you will be able to realize it very easily. Opening inventory, let's suppose, is 10. We know that the opening inventory will always be added. Either it is raw material opening or work in progress opening, and closing inventory will always be subtracted. Either it is raw material or it is work in progress. Let's suppose closing inventory will be is 15. So what is going to happen? You need to subtract 5 from cost of production. Simple, the net effect of these two amounts. Or you may say कि 10 जो है वो आप ऐड करेंगे और 15 जो है वो आप माइनस कर देंगे. ओवरऑल आप 5 माइनस कर देंगे एक्चुअली. अब हो क्या रहा है? From the start of the year till the end of the year, or you may say from opening inventory, by going from opening inventory towards closing inventory, your inventory has increased by 5. So if in the question it has been given that the inventory has been increased by 5, it means that you have to subtract it from cost of production. So increase in inventory means that opening and closing difference is given. And that difference, if the difference is increasing, it means that you have to subtract 5 from the cost of production. And if the difference is decreasing, then you have to add that amount into cost of production. Add का भी देख लेते हैं एक एग्जांपल. सपोज करें कि आपकी ओपनिंग इन्वेंटरी जो है वो 20 है और आपकी जो क्लोजिंग इन्वेंटरी है वो क्या हो गई है? वो 10 हो गई. क्लोजिंग इन्वेंटरी ओपनिंग इन्वेंटरी से क्लोजिंग इन्वेंटरी क्या हो रही है? डिक्रीज कर रही है. कितने से? 10 से. तो आपको 10 या क्या करना पड़ेगा? कॉस्ट ऑफ प्रोडक्शन में ऐड करना. So it means that there is not necessary that opening and closing inventories are given separately. It is possibility that they will just give you the increase in the direct material inventory with the difference of the opening and closing inventory, which will be subtracted from cost of production, or decrease in the work in progress inventory, which is the difference between opening and closing work in progress. And because it is decreasing, so that amount will be added in cost of production. At the same place where we used to write raw material or where we used to write work in progress, at the same place in manufacturing account, right? So ये तो बात हो गई हमारी ये. अब अगली बात करते हैं. और अगली बात ये है कि टॉपिक which we are discussing is that we need to find finished goods closing inventory at the end, which is not given in the question. Sir, दी तो ये नहीं दी बेटा, ये दी हुई है finished goods opening inventory at transfer value 26,400. So we can find the factory profit out of finished goods opening inventory. We can differentiate, we can take out the profit from this finished goods opening, which is given at transfer price, to find the cost of finished goods opening. But closing finished goods is not given. Number one. Second, we have been given increase in provision for unrealized. Always remember कि ये increase कभी भी पेपर में नहीं दिया होगा. Increase in provision का मतलब है this is the income statement figure which was the difference of brought down and carried down. Let's give you an example at the same place. इसलिए example same place इसलिए दे रहा हूँ ताकि आपको वो जो point है वो अच्छे तरीके से समझ आ जाए. तो हम अकाउंट बनाते हैं किसका, प्रोविजन फॉर अनरियलाइज्ड प्रॉफिट का अकाउंट हम ओपन कर लेते हैं, जो कि हम नॉर्मली बनाते भी पहले नॉर्मल वे में. हमारा राइट साइड पे आता है यार ब्रॉट डाउन व्हिच इज द प्रॉफिट इंक्लूडेड इन फिनिश्ड गुड्स ओपनिंग. इधर आपका आता है डेबिट साइड पे कैरिड डाउन प्रॉफिट इंक्लूडेड इन फिनिश्ड गुड्स क्लोजिंग, और डिफरेंस कैन कम ऑन द क्रेडिट साइड विद द नेम प्रॉफिट एंड लॉस, एंड डिफरेंस कैन कम ऑन द डेबिट साइड विद द नेम स्टेटमेंट ऑफ प्रॉफिट एंड लॉस. वो जो डिफरेंस है वो हम नॉर्मली कैलकुलेट करते थे, बट अनफॉर्चुनेटली दैट डिफरेंस इज गिवन इन द क्वेश्चन फॉर द फर्स्ट टाइम. Normally it has not been given in the question. A problem क्या है? Out of these three amounts, difference between brought down and carried down is given, but the carried down is not given. The profit included in finished goods closing is not given in the question. So we have to calculate that carried down by preparing the account. Provision for unrealized profit account will be prepared, and then we can find. Now, because the provision is increasing, the unrealized profit is increasing actually, because this is given increase in provision for unrealized profit, how much? 600. So that will be written on the credit side, because increase will always be on the credit side, decrease will be on the debit side. So I will write the increase over here, profit and loss, which is going to be 600. Sir, where is brought down? We have to find brought down. Sir, how come? We know that the factory profit, which is given in the question, is already there, and that is 20%. Factory profit is 20%. For everything, but in this question the finished goods opening inventory at transfer value is 26,400. It means it includes factory profit of 20%. If you want to separate profit from finished goods opening at transfer price, we need to go for multiply. We need to multiply it through by margin, not by markup. We have to convert 20% into margin, which will become 20 over 100 plus 20, 20 over 1. So the finished goods at transfer price is 26,400 multiplied by 20 over 120. How much will come? 4,400. That is going to be the profit included in finished goods opening. I will write over here, and now I can find the profit included in finished goods closing, which is 5,000. And this is how I have prepared the provision for unrealized profit account, which is very easy. But apparently it looks that it is tough because of the reason that we used to prepare provision for unrealized profit account only to find the difference in the profits of finished goods, right? Either it will come on the credit side, or you may say that we used to find increase or decrease in provision only. But here increase is given and carried down is not. So we have to calculate it that way. We have find brought down profit included in finished goods opening, and we have increase in provision for unrealized profit on the credit side, profit and loss with the name, and the carried down is 5,000. We can find cost over here also of finished goods opening, 26,400 minus 4,400, which is the profit included in finished goods opening. You can find the cost also. Maybe that cost, finding the cost is not a part of the question, or maybe it is not required, but I am calculating just for the sake of understanding purpose. So 26,400 minus 4,400 will be 22,000. And if you calculate 20% of 22,000, you will find the same answer, which is going to be 4,400. But 4,400 is the 20% of 22,000 because it is markup. But for 26,400, which is given on selling price, market price, we have to multiply it with 20 over 120, which is margin. Then you will get the same answer, which is 4,400. Now let's discuss the real thing of this question, that which is going to be the difficult part of the question. That was, where is finished goods closing inventory? Because if we don't have finished goods closing inventory, we are not able to prepare the income statement. Finished goods closing and opening, they won't come in, finished goods opening and closing won't come in manufacturing account. They used to come in income statement. तो अब हम calculate करते हैं, which is very, very simple. So from the finished goods closing at cost, finished goods closing at cost multiplied by 20% should be equal to how much? 5,000. Sir, how come? Because 20% is the markup, and whatever the amount is for finished goods closing at cost, which is still unknown, if we multiply it with 20%, the answer should be 5,000, because that is the profit included in finished goods closing at cost. Because if we want to calculate transfer price, then 20 or 120 is going to be the application. But here we can do it in the more simple way. I will multiply it with 20%. The amount is going to be 5,000. Let's calculate finished goods closing at cost. And that is going to be 5,000 divided by 0.2. 5,000, 20% will be, by going on the opposite side, will be divided. So how much is going to be 5,000 divided by 0.2? 25,000. So 25,000 is the answer of finished goods closing at cost. But I need finished goods closing at transfer price. That's very simple. We will add 25,000 plus 5,000. We will get finished goods closing at transfer price, which is 30,000. So 30,000 is going to be the finished goods at transfer price. 25,000 will be the finished goods at cost, closing at cost, and 5,000 is the profit included in finished goods closing. And profit included in finished goods opening is already calculated. 4,400 increase in provision is given. 600, 5,000 is going to be the answer. Okay, so this is going to be a very difficult question, which has created problem for the students. Now the question is this, that how we'll be able to know that we are going to solve this question that way. My answer to this is, to all my students, that please do practice past papers. If you are not doing practice past papers, then I have no other choice to answer you that you have to do it on your own. I don't have any choice, because my job is to solve the question in front of you to make you understand. Right? So the same concept has come in February, March 18, sorry. The same concept has come in October, November 20. And then it has also come in February, March 23. So if you have solved paper of February, March 18, if you have solved paper of October, November 20, you will be able to solve paper of February, March 23, because it implies the same concept of finding finished goods closing through provision for unrealized profit account. And in that way, in this question, decrease or increase will be given. Carried down will not be given. Same policy, same pattern has been adopted from these two questions. Right? I am going to rub it up, because you have all the answers with you now. You have all the amounts with you now. So I have to solve the question, that how we are going to solve this. First of all, we have to prepare the manufacturing account, right? So let's prepare the manufacturing account. I haven't gone to see that what was required, because I was already knowing this. So no reason to waste time over the requirement. So manufacturing account is going to be start from purchase of raw material. This is also an important point, which students generally used to feel awkward about it. So we start from raw material opening. Raw material opening is not given, because we have been given only increase or decrease. How come I can write? So I have to start it from purchase of raw material, which is 2,16,000. Right over here, 2,16,000. And as discussed with you, that we have been given increase in direct material inventory, that will be subtracted, because increase in direct material means that closing inventory is more than opening. So we have to subtract increase in direct material inventory 1160. Here I will write less increase in raw material. Increase in raw material. Direct material लिख लें आप, raw material लिख लें, doesn't make any difference. And that is 1160. Can you subtract it so that we may get the answer? Please do it. So the answer is going to be material used. This is going to be material used, or you may say material consumed or put in process. 148 214,840 is the answer. I believe that you may calculate it also. If it नहीं इसको नहीं आगे से, so that I don't have face any problem. Add कर लेंगे इसमें direct wages. Let's see. Direct labor cost is already given. You may write direct labor or direct wages, one of the same things. That is 196,200. Let's see the adjustment. Maybe there are some additional information given regarding direct wages or something else. February March 32 का हमारा answer है. Explain two reasons why a business may apply a factory profit rate of factory profit. So to know the financial performance, to give performance appraisal to the employees, to know the performance of the employees, right? And to know that okay, how much difference we have, or the same goods, if the same goods are purchased from an outside supplier. Prepare the provision for analyzed profit account. We have already prepared it. The direct labor cost include 3,000 for workers repairing factory machine. So the question has been asked you that 3,000 relates to the repair of factory machine, and that amount is included in direct labor. So it's not a part of direct labor, it is indirect labor. That needs to be subtracted. So 3,000 will be subtracted from direct labor. What is the amount of direct labor? Direct labor is 196,200. Right over here. 196,200 minus 3,000. 193,200. 193,200 is the answer which we are going to write for direct. जी तो डायरेक्ट लेबर में से हम 3,000 जो है वो माइनस कर देंगे. द डायरेक्ट लेबर कॉस्ट गिवन is 196,200 minus 3,000, that is going to be 193,200. Let's make a total of it. So we will get the prime cost. Prime cost, basic cost will be our answer. कितना आ जाएगा जी? टोटल कर लें इसको. Sorry. जी. And then I will add factory overheads into this prime cost, and we'll see how factory overheads have been given in the question. 408,040. So the answer is going to be 408,040, right? That is going to be the prime cost. Next, we have to add factory overheads as usual. And factory overheads has been given in the question with single amount. We don't have other amount given. That is 85,000. But we don't need, we are not supposed to write 85,000 directly. Why, sir? Because we have something downstairs, down the page, which is that office equipment cost 10,000 purchased in January was classified as factory machine. Both office equipment and factory machinery has been depreciated at the rate of 10% per annum using straight line method. Let's make it clear, very easy. गलती से हमने ऑफिस इक्विपमेंट जिसकी कॉस्ट 10,000 थी उसकी डेप्रिसिएशन को we have considered it as the depreciation on factory machinery. It means that we have added in factory overheads. Though that machinery is not used in factory, that machinery is used in office. So we are not supposed to charge depreciation, which is going to be 10,000 at the rate of 10%, 1,000. That 1,000 should be added in the office expenses as depreciation on office equipment. but we have wrongly added in factory overheads as depreciation on factory machinery. We have to subtract it. So 85,000 minus 1,000, which is 10% of this 10% of 10,000, and we have added it wrongly over here because that is not the depreciation on factory machinery, that is the depreciation on office equipment. And then you will get the amount of factory overheads. Prime cost add factory overheads, you will get total factory cost. So you will get total factory cost. Let's make a total of this. I believe that how much it will become. $408,040 plus 84,000. 492,040 will be the answer. Now we will add decrease in work in progress. Decrease in work in progress inventory in this part. Why, sir? Let me explain again, though it is already discussed. Increase in raw material has been subtracted. Why? Because the inventory is increasing over the year from opening to closing. It has been increased by 1,160. So the closing will be subtracted because of the increase in direct material inventory, and decrease in work in progress inventory will be added 960. So I will add 960. We have discussed it at the very start. So 960 is going to be added over here. And when you add decrease in work in progress inventory, you will get the amount of cost of production. So if you just look at the question, it's quite simple and not that lengthy, but it is more conceptual. You may say like that. So what is the answer of cost of production after adding 960, which is the decrease in work in progress? 492,040 plus 960, 493,000. So here we are able to calculate the cost of production, and we know that we have to prepare the income statement also. But cost of production will not end over here. How, sir? Because we know that when there is a question of factory profit, we know that we have to add factory profit into cost of production to find the market value of goods produced. Why, sir? Because in case of factory profit, income statement is always prepared at transfer price. Cost of sales will always be written. Everything in the cost of sale will be written at transfer price. What is the rate of factory profit? It is given in the question, and that is 20%. So calculate 493,000 into 20%. How much we will get? 98,600 will be the factory profit. I will add factory profit into cost of production, or add cost of production with factory profit. You will get the transfer value of goods produced, or you may say market value of goods produced, or selling value of goods produced if the same goods are purchased from outside supplier. How much will be there? 493,000 minus 98,000, oh, plus 98,600. Pardon? 591,600. Right? So this is the transfer value of goods produced, 591,600. We have already done with that. Now I have to go for the preparation of income statement. So I'm going to start with revenue. Let's see. Sales revenue is given in the question, and that is 9,36,000. So I will write over here 9,36,000 less cost of sales. In cost of sales, I will write opening inventory of finished goods. Everything in cost of sales will be written at transfer price. So opening inventory of finished goods at transfer price, obviously you will write. Add market value of goods produced. Again, it is going to be written at transfer price, and less finished goods inventory, जो कि closing है, finished goods closing, but at transfer price. Always remember, we will write all the amounts at transfer price. We have been given in the question, opening finished goods has already been given in the question, and that is already at transfer price 26,400. We have played with these amounts at the very start of the question. 26,400. Add market value of goods produced. We have calculated from manufacturing count, that is 591,600. Then finished goods closing at transfer price, we have calculated that is going to be 30,000. How come, sir? Because the profit included in finished goods closing was 5,000, and that is equal to 20% of the finished goods closing at cost. So finished goods closing at cost will be 5,000 divided by 0.2, that is 25,000. Because profit is 5,000, so finished goods closing at transfer price is going to be 25,000, which is cost plus the profit 5,000, and we will write it at transfer price. So let's calculate cost of sales. 26,400 plus 596,000 minus 30,000. What is going to be the cost of sales? 588,000. 588G. 588,000. 936,000 minus 588,000. We will get gross profit 348,000. Now, in spite of that I will complete my income statement, I will go for the factory profit working. So I will add factory profit over here, which is the amount added in market value of goods produced over here, and it is written in the manufacturing count 98,600. And I will subtract less provision for unrealized profit from this factory profit, which was 600. That was already given in the question. Usually we used to find this 600 by taking the difference of the brought down and carried down from provision for unrealized profit account. But here in this question, we have been given increase and decrease. Both can happen. 600 will be there. I will subtract it and I will get the amount of the factory profit. How much it is? 98,000. Right? So it means that 98,000 profit is added in our income because of the factory managers or factory personal's efficiency. They are able to produce the goods for us. If the same goods are purchased from outside supplier, we have to pay 98,000 more. So they are able to produce the goods 98,000 less than the price available in the market. So that is a big favor which is given to us by our factory personals, and it shows the efficiency of the factory manager and the people working over there. So kindly add 348,000 plus 98,000. 348,000 plus 98,000. 446,000. And then I will less expenses. I will subtract expenses from this to find the profit for the year. Spelling has gone wrong for expenses, no matter. I will write first here selling and distribution. And then I will write admin expenses. And then there will be interest expense also. We'll discuss this later on. First, we'll write selling and distribution cost 97,000. If we just look at the question regarding additional information, if you see, there is nothing given regarding selling and distribution, nothing else. So I will write selling and distribution as it is. So over here, I will write 97,000. But in admin expenses, remember, we have to add 1,000 of the depreciation expense, which is wrongly added in factory overheads. We have subtracted from there, and it will be added in admin expenses as depreciation on office equipment with an amount of 1,000, because 10,000 at the rate of 10% is 1,000. So let's see that how much will be the admin expenses. 2,34,000 plus 1,000, so it will come 2,35,000. You may consider it a difficult question, but believe me, it's not a difficult question. This is one of the easier questions has come in the past paper. What was the reason behind? Because the concept of which we have discussed earlier regarding finished goods, that has been repeated. So if you have gone through the past papers, that concept has easily been done by you. And the other part of the story is not a rocket science, quite easy. Total, how much? 235, 338,000, 446,000 minus 338,000. You will get your profit from operation. So how much will be there? 446,000 minus 338,000. There will be 1,08,000. Now I am going to subtract less interest cost. Normally we will use finance cost, minimum finance cost for interest cost. You may use interest cost also, doesn't make any difference. Let's see interest cost is given over here. No, interest cost is not given in the data above. So let's find out. J Limited obtained a loan to buy a delivery vehicle. The interest on the loan is $4,000, and that had been included in selling and distribution expense. So we have done little error that we have to subtract interest finance cost 4,000 from here. That's right, but we have to subtract it from selling and distribution. There was a little working in selling and distribution. Because of that, these amounts will be little changed. No, we will not do this. That we will go for the rectification in the in the answer. No, we have to do the working whatever is required. So that will be 93,000, 97,000 minus 4,000. So 93,000. So what will be the answer now? 242,000. So 446,000 minus 242,000 is going to be 342,000 will be the answer, no matter, because 97,000 we will subtract 97,000 minus 4,000. So selling and distribution expense, because interest cost has been added, unfortunately, that will be subtracted 93,000, and the total is 350,000. How much? 342,000. Sorry. So the answer is going to be 1,04,000, right? And then we will subtract interest cost from the profit from operation. So you will get your profit for the year, and that will be 1 lakh. Okay. If your answer is coming 1 lakh, so it shows that your answer is 100% correct, obviously, because it is giving us a whole value. But it is not necessary that you will find a whole value in every answer. But if the answer is coming in whole value, it depicts that you have done it correctly, right? So this is how we have solved this question. So inshallah, let's see that. We'll see in the next class. And please subscribe my channel. Thank you very much.